Hello, welcome to this episode of Doing Insurance Right. My name is Scott Jenkins. I'm a local farmers insurance agency owner here in Phoenix, Arizona. And today I just wanted to go over some of the extras that can be found on your home policy that may interest you, may not, but just want to make sure that you are aware of what's out there, what you can have covered, and maybe something that can help save you some money down the road or currently. So your basic coverages are going to be your structure, separate structures, your what they call loss of use in case you had to move out of the structure, personal property, medical payments, and then liability. Those are going to be your main categories when it comes to a home policy. There are a lot of extras out there that you might want to be made aware of. I'll just run through kind of a few and what they do. So a lot of companies have what's called a service line endorsement. So a service line endorsement refers to any service line coming into the house, whether it be utility like power, lights, water, or even like fiber optics, things of that thing. But anything basically line-wise that comes into the home. That is available. Most companies are going to require either at the start of a new policy or either at renewal. Not a lot of times do they add it midterm, but it is something that you can get taken care of and look at. And I'll give you an example. So the city of Phoenix, especially in the older areas, is notorious for selling insurance, a separate insurance policy that covers you on that. Most insurance policies, for example, like ours with Farmers, has $10,000 worth of coverage at a smaller deductible of only $500 if it ever occurs on that one. So that's going to be one of those areas that you might want to look into, especially older homes with older pipes coming in from the city, things of that nature. It's always a good thing to look at. Another one's going to be backup of water and sewer and drain. That's pretty self-explanatory. If water or sewer back up into the home, that's another coverage. There's all kinds of different amounts on that. Like with Farmers, for example, we've got amounts between $5,000 and $50,000, and basically just covering any damage that's going to happen because of a water and sewer drain backup. Now, a lot of the newer homes or maybe custom homes have backflow sensors, which would basically not, for the most part, unless those fail, not allow that to happen. So it might not be important for you that owns that type of home. But if you do not have those sensors, always a good thing to look at as well, especially the older homes. A lot of times we talk about older homes. Now, if it's over 30 years old, so for example, built before 1990 right now, something you probably want to take a look at. There's also going to be all kinds of extras when it comes to property. So do we have jewelry? Do we have quite a few pieces of jewelry that, let's say, are over $2,500 a piece? Right? Those are the kind of pieces that you want to look at if you want to put those in your homeowner's insurance policy. And a lot of times with those particular pieces, you can go with no deductible, same deductible you have on the house, things of that nature. Now, a lot of times those have to be appraised, or if you just purchased, receipts will be needed for those. But you can get jewelry coverage, all kinds of different, whether it's watches, rings, necklaces, earrings, whatever it may be. But when it comes to jewelry, same thing with guns. If the guns are under, if they're over $2,000 a piece, and then we're talking per gun, probably something good to look at. You can get an increase of that. You can also just take same thing with jewelry, take an increased total on the policy, like overall. Let's say you didn't want to go get the appraisals. You're okay with paying a deductible, but I got $20,000 worth of guns. You can buy $20,000 worth of guns. Coverage. You can also buy $20,000 additional jewelry coverage, same type of thing, if you're okay with that. Same thing is like if we're gamers, or if we have, let's say we have a lot of equipment at home because we're working from home now with the pandemic, do we want additional coverage for that? Maybe we have a computer, printer, all kinds of setup for a home office, and we've got $10,000 worth of things in there. Or we have a serious gamer who's got a $5,000 laptop. Or we've got, some to that effect. You can buy coverage for all those options as well. Also, there's going to be, like with Farmers, we have for glass. We have kind of like we have a $0 deductible for glass coverage on your car. Same thing for the home. Always recommend, if you live in a golf course community, that a possible golf ball could hit the window, that we get that taken care of. And with windows, and if you live on a golf course, I can almost guarantee all of your windows are custom. I don't think there's a single window out there anymore that's considered normal. It seems like everything is custom in that retrospect, but always something a little bit, more you can get that coverage. It doesn't cost that much, and just protect yourself in the windows. You can do that in any home policy, but it seems like golf course is a pretty high area of where that gets done, or where that damage does happen. We don't see a ton of weather here, So we're not going to see like hail and things of that nature. But if you are, let's say in a hail, tornado type area, things of that nature, something you might want to look at with the windows as well. That is available for most companies and with farmers on that one as well. There are quite a few different options when running through this. So let's say you own a condo or a townhouse. They're going to have basically what they call loss assessment coverage, which means, for example, if let's say we had a fire at your particular townhome, the homeowners association takes care of the outside of that, right? But you're responsible for, let's say, the inside. Well, there's also going to be a loss assessment on you if, let's say, your particular home was. So loss assessments can range from anywhere from $1,000. I've seen them as high as $50,000, depending on the insurance that the homeowners association has to carry. So making sure you have the correct loss assessment is big. It's not an expensive product, but if you only have $1,500 worth of coverage and it's supposed to be $25,000, it can make a huge difference for you financially to come out of pocket. So making sure you have enough coverage for that is definitely wise. Like I said, there's going to be all kinds of different things you should run with your current agent, or you can call our office. We'd be more than happy to run through things with you as well. But just want to make sure that you know all the options available in case those things can happen. Like I said, your standard homeowner policy is there to protect against weather, fire, theft, things of that nature. But the extras is where it really can't come into play, especially if you have a lot of things or a lot of things going on in the home. So I wanted to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever great platform you're listening to us on, whether it be Apple, Spotify, Google, or any other ones out there, greatly appreciate it. And I look forward to seeing you on the next episode.